more compensation, not just for inflation, but for uncertainty. Uncertainty about the Fed, uncertainty about President Trump replacing Jerome Powell, uncertainty about whether China, Japan, and other countries are dumping treasuries in retaliation. So even if inflation's falling, the cost of borrowing isn't. And that's what the bond market is telling us. Because unless we bring those rates down, everything will get more expensive. Mortgage rates, credit cards, car loans, small business debt, and even student loans. And it's not just the US. The rest of the world is going through the same thing. In Europe, Germany's facing a recession, and the European Central Bank has already started lowering interest rates to try to avoid a recession. And while all of this is happening, investors are pulling their money out of risky markets and into US dollars and short-term bonds, even with all this chaos. The whole world is going through what economists call a flight to safety. And right now, safety looks like cash, gold, and short-term US Treasury bonds. So the whole world is kind of dropping cards right now, and we're all losing faith in the performer, and everyone's staring at the stage wondering, was that supposed to happen? But that's not how I'm thinking about this, because as someone who loves entertaining and economics and investing, I'm always reminded that the audience doesn't always know where the trick and where the show is going. Sometimes the real effect happens after the misdirection. So here's what I'm doing with my money, and I'm not doing anything different. I'm still dollar cost averaging into VTI, the ETF that represents the total US stock market, because I believe that in the long term, the market will continue to go up, especially if we have a big drop. In fact, I kind of hope that we see a lot more drops in the future so I can buy more of the market.